Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Tuesday, the 7th of July, 2026. I'm back from a long holiday weekend, but it feels like we're back where we were in March and April because the IRGC is threatening the Strait of Hormuz again, and that is impacting markets as we head through the middle of this week. In today's video, I'll break down everything that you need to know ahead of today's US session. Let's get into it. So as I alluded to earlier, the IRGC has struck about 2 ships is the latest reporting in the last 24 hours as Iran continues to flex its muscle and seek control over the Strait of Hormuz. This takes place, of course, despite a nominal ceasefire between the US and Iran that supposedly would return the Strait of Hormuz back to normal traffic. Separately, Iran is burying its former prime minister, and the Foreign Minister of Iran has said there will be no agreement with the US as long as threats persist. All of this is suggesting that the ceasefire, I guess, remains intact based on the state of affairs and how it has been proceeding, but we're still a long ways from a sustainable peace situation, and a nuclear agreement seems yet further off. And as a result, we do see oil prices on the rise at the US Open. The US dollar is flat, US indices are mixed in relatively quiet trade, and that could set the tone for the rest of the week. Looking ahead to the economic calendar, there's not much in the way of top tier news today. There wasn't much yesterday. And then spinning it forward, we do have an RBNZ meeting overnight. That's probably only relevant to those of you trading the New Zealand dollar and New Zealand assets. We will get the minutes from the most recent FOMC meeting, which of course was Chairman Warsh's first as the head of the Federal Reserve. So reading between the lines there, especially with less communication likely to come from the Fed, that could be something that may, over a longer run, impact markets to get a bit more insight, at least as it stands, into where the Fed is seeing interest rates developing and how they're viewing the economy. We'll get the usual initial unemployment claims report on Thursday, and then Friday brings Canada's jobs report, relevant for those of you trading Canadian assets. But overall, a fairly quiet week, and then next week we'll start to shift the focus more toward earnings and to the US CPI report, some of the bigger events that could have a larger impact on risk assets. Today's chart of the day is a bit off the beaten path. This is the US dollar versus the Swiss franc on a daily basis, and we have some pretty clearly defined technical levels to watch. First thing that should jump out at you from this chart, at least the first thing that jumps out to me, is a clear uptrend. Over the last month or two, we've been putting in higher highs and higher lows on this currency pair, and we also have well-defined levels of horizontal support and resistance. The resistance level to watch is up here at 81.25. That's the highest price dollar Swiss has reached going back almost a year now. Meanwhile, we have support at previous resistance from back in March. That comes in at about 80.10. As long as we're within that range, we're consolidating, but the uptrend remains intact, and perhaps sooner rather than later, especially if we can get some bullish news from the US economy, we could see a breakout above 81.25, clearing the way for more gains to come here in this currency pair. So make sure that's on your radar if it's not already. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I can ask just one favor before you go, please do drop a like on this video. It's a free way to show your support that really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again, and best of luck with your trading today.